According to supply managers in the 9 Mid-America states, how is the economy performing?
According to our survey of supply managers in 9 states, and this is for the month of October, the overall index bounced higher to 52.6 from last month's 49.1. This is very good news. This is really the highest reading we've recorded since June of last year. And here I'll bring up a chart showing our Mid-America index compared to the U.S. index. The U.S. index will come out later on this morning. I expect it to be up as well. So we're seeing manufacturing, I think, has bottomed out. We're going to see some better numbers coming out of manufacturing. That's both for the Mid-America and that's for the U.S. And what's causing this, in my judgment, is we've got factors such as the federal support, crop support payments, farm support payments of $16 billion. And that's been distributed. That's having some positive impacts. We're seeing I won't say increases in trade, but at least some of the global factors are a little more positive than they were. And finally, some of the flooding, rebuilding coming from some of the floods that we've seen, that's having some positive impacts on certain parts of the region.
What negative impacts are trade issues having?
The trade issues still continue to have negative impacts on the companies that we're surveying. And even with the negative impacts, 54% of the supply managers say they support not only continuing, but a high percentage of those say let's raise the tariffs even more for China. So that's 54%. When we talk about the impacts on prices, 59% of the supply managers indicated that they were paying higher prices for their supplies and inputs due to the tariffs. So that's having some impacts, but at this point in time it's not being passed off in the form of higher prices.
What were the hiring trends?
Hiring trends were up a bit. The hiring was up to 50.0. Now that's up from 46.7, so that's a pretty good jump, but we're still seeing the real issue out there of finding and hiring those qualified workers. That still remains an issue, and at 50.0, that's hardly something you can jump up and down about, but it's much better than what we saw last month.
What impact is inflation having?
Our inflation gauge for the month of October was up a bit, up to 57.0 from 55.9 last month. So we are seeing some impacts. I would say some of that's because of the tariffs. Overall, though, this is not spilling over into consumer prices, at least at the overall consumer prices. Now, unfortunately, the core consumer prices that we're seeing right now is about year over year, about 2.4%. So it's underreported story right now, but we are seeing what we call the core CPI, core consumer price index, is up 2.4% year over year. And that's well above what we'd like to see. We'd like to see it at 2.0. So there are some inflation embers there, I'll call it, and that could be a problem going forward.
What does the Mid-America economy need?
The Mid-American economy needs qualified and available workers. Pure and simple right now. The global economy is in an economic slowdown and recession in certain parts of the globe. In this part of the country and the U.S., we're seeing continuing expansion, very low unemployment rates, so that's one thing we need: qualified and available workers. We need the passage. One of the real important factors is the passage of USMCA. That's what I'll call NAFTA 2.0. That's the trade agreement with Mexico and Canada that needs to be approved and signed by the President. We're seeing political haggling going on, and that's not good, and certainly not good for this part of the country, particularly those businesses that are tied to agriculture, where this is going to be very good for agriculture. We need to see that passed and signed by the President. Trade deal with China. We're seeing that. We were seeing an agreement. We were going to see Xi Jinping and President Trump, that's Xi Jinping, head of China, and President Trump were going to meet in Chile this month. Well, that's been called off. Chile called that meeting off, the meeting of international meeting. But President Trump has indicated that he and Xi Jinping will meet, and they're very likely to sign a trade agreement this month. That would be very important, at least and move at least some positive factors onto the table, and that's needed certainly for this part of the country.
What are some areas of risk that we need to monitor?
The areas of risk are just jobs, and later on today, Bureau of Labor Statistics indicate the number of jobs for the month of October. I expect those numbers to be in the 100 to 150,000 range, but if it should be lower than that, that's a real indicator, something to keep an eye on, something to be concerned about. Wages from that report, they have been flattening out there. That's a real problem. We need to see year-over-year growth of 3 to 3.5 to even up to 4%. That would be very good. That comes out in the jobs report later on this morning. Keep an eye on the 10-year yield on the 10-year Treasury. That has been moving up. Now it's up to 1.8%. Say, if it moves above 2, that's indicating some at least risk are coming down. That's a good thing, but maybe inflation's going up. Now, if it should bounce much higher, that would be a real problem, perhaps indicating inflation is rearing its ugly head. So keep an eye on the 10-year Treasury, but again, it will move up as we see lower and lower risk. See what happens in terms of Brexit. That's the UK, the United Kingdom's exit from the EU. We'll see a solution to that in the next 3 months, we hope. We thought we'd be seeing it just yesterday. It didn't happen. So keep an eye on Brexit, what happens there. A hard exit would not be good. Hard exit meaning without a lot of planning, without some firm agreements. That would spill across the globe, and that would certainly be bad for the global economy. And again, pay attention to what happens, the meeting between Xi Jinping and President Trump. It's likely to take place somewhere this month. It was going to take place in Chile, but that's been called off because of the political instability in Chile right now. So all in all, again, it was a good report. Exports and trade numbers still not good. Exports and imports below growth neutral. That's a real issue. But going forward, at least we're seeing, I think manufacturing has bottomed out. We're probably going to see some better numbers in the weeks and months ahead. I think later on this morning, we'll see the U.S. number is likely to come out and be more positive than it was last month, perhaps moving above growth neutral.